Good. We're rolling. Take it away.
Okay, good morning, everybody. My name is Rebecca Lopez-Chris. I'm the Deputy Commissioner from the Philadelphia Department of Revenue. I want to thank you all for coming today. I'm going to try to speak much slower. This is the second tax reform demystified community meeting that we have run. So we're really excited that you are here today. I am joined by my co-host, Shruti Arvind. She's an analyst here at Revenue. I also want to thank some of the other folks, City Council, Sabrina Maynard's here, Helena Lockhead, Miguel Garza. So what else do we have here? Oh, we also have a really great interpreter, which is a great reminder that if you need interpretation services in Spanish, you can go to the lower right of your screen. I think there's a little globe there. Great. Okay, Sabrina's putting that in the chat. Okay, before we really get started, I want to let you know that this meeting is being recorded. I have some legal bits that I have to say. This public meeting is being recorded and will be posted online per city ordinance. Your participation in this meeting constitutes consent thereto. So basically, if you stay in this meeting, you are agreeing to be recorded. Okay. Also, if you're in this meeting, I just realized I didn't plug in my headphones. If you're in this meeting, you probably know that there's a tax reform committee happening this fall. This is a collaborative effort between the City Council and the Mayor's Office, and it includes a lot of community leaders, tax experts, and city officials. The committee's meeting now throughout the fall and into the winter, and they're going to talk about a lot of the same things that we're going to talk about today. You can expect to see their recommendations published early in 2022. These recommendations are going to help inform the next budget cycle. That's a process that happens every spring. If you're interested in sharing your thoughts with the committee, we put a link in for a survey here on the screen, also in the chat. The survey is available in English, Spanish, French, Vietnamese, and simplified Chinese. Okay, and again, if you need interpretation services, if you need interpretation services for this meeting in Spanish, you can go ahead and click the little globe on the lower right-hand corner of your screen. And also, if you have questions, please put them in the chat. Revenue staff is monitoring them, and if they can break in and tell me to stop and answer them, or we can hold them for the appropriate time. Okay, I want to plug in the headphones. Shruti shaking your head. How about now? Can you hear me now?
Yep.
Great. Okay. Okay, so today we're going to discuss a lot about taxes and what it means to try to reform them. Our goal today is to help give you a very high level view of the major taxes in Philadelphia and a little bit about how the budget works. The point is not to make you an expert, but it's meant to help you become more informed and to help you talk about these things with your neighbors or your colleagues. We want you to be able to talk about what's happening in Philadelphia. We'll talk a little bit about what makes a good tax system, what's a fair tax system, and again, it's going to be very, very high level. We're going to do some tax scenarios as a team. We'll be able to actually use a calculator to see what happens when we start fiddling around with tax rates of the existing taxes. And I have some housekeeping. We ask you to mute your mics if you aren't talking. And also, it's really nice to see your faces. I understand if you don't want to turn on your camera or you're not able to turn on your camera. But if you can, it's nice to have more of a community meeting feel. And I wish we were in a room that we could do all the exercises with Post-it notes and squiggly lines and circles. But this is where we're at. This is where we're at in the world right now. Again, if you have questions, go ahead and put them in the chat. Before we get started, I kind of want to know who is in the room. This is a pretty small group, so that's kind of exciting, or that's good because I think we can have maybe a little more deep, a better conversation, a deeper conversation. So there is a poll that's going to pop up. Who are you? Are you a Philadelphia resident, a property owner, a business owner, a renter, or maybe you don't even live in Philly? It's okay if you don't live in Philly, but we'd rather that you did. Can they can they answer more of them?
Yep, you can select all that apply.
Oh, great. All right, I think everyone probably participated who's going to participate. All right, so people here are residents and they're property owners, no business owners. Interesting. And no folks who don't live in Philly. In our first meeting, we did have one or two. Okay. We don't have anyone on the phone. Okay, so very quickly, we want to talk about the budget a little bit. So the budget is the city's annual plan that helps fund all of it sets the price tag for all of the programs and services that the city is going to provide to the residents. We have a requirement that we have a balanced budget. That's a generally accepted law and rule that you should do that. It's basically how much are we going to spend versus the amount of revenue that we're going to get in. Okay, so Shruti, do you want to bring up, we have a little video that we want to show folks.
Hey, Philly, just like you, the city
Are you able to hear the sound?
Yep.
of Philadelphia needs money to keep things running. Let's talk about how our annual city budget works. The budget is the annual plan with a price tag for the City of Philadelphia's programs and services. Decisions around how the city spends resources can impact the quality of life of businesses, residents, and visitors. The city divides its budget into two main types, operating and capital. The operating budget funds day-to-day services and programs, like trash collection and building inspections. The capital budget funds long-term major infrastructure investments like recreation centers and fire engines. The Philadelphia Home Rule Charter requires the city to produce a balanced budget. This means our revenues and reserves must fully cover our spending. The budget is organized around the city's programs and services. Organizing the budget this way provides a clear picture of how much money is being spent on each program, what that service is, and how well the program is performing. For example, the Streets Department measures on-time trash collection, which helps the city to see how well that service is working and the value of our investment in trash collection. Let's start with talking about our operating budget. Each year, the Budget Office works with city government department leaders to prepare an operating budget. In addition to an annual budget, the Budget Office also creates a 5-year strategic and financial plan, which helps the city plan ahead by projecting revenues and spending over a longer period of time. Before we can decide how we want to spend our money, we must first figure out what our projected revenues will be. The largest portion of our revenues come from local taxes, like the wage tax. Other funding comes from fines and fees, aid from state and federal governments, and revenue from other city funds. When we are putting together the operating budget, we first look at what services and programs are currently provided and how much they will cost next year. We also look at the costs the city is required to pay for each year. We call these fixed or inflexible costs. Over 50% of the general fund is made up of fixed and inflexible costs. This means that less than half of the city's general fund budget is unrestricted and up for discussion each year. After establishing our fixed and inflexible costs, we look at what new or expanded services and programs the city can offer. Since we need to produce a balanced budget, not every new project can be funded. When making decisions about what will be funded and what won't, city leaders utilize feedback from people like you to understand community needs. They also must consider legal and constitutional requirements and the impact on racial disparities and other factors. Now let's discuss the capital budget. The capital budget allows the City of Philadelphia to make long-term investments in physical things like buildings, roads, and infrastructure, and in major information technology systems that help run the city. Each year, an annual capital budget is produced, as well as a 6-year capital program, since many projects takes years to complete. The capital budget is funded by many different sources. Most of the money has requirements and must be spent in specific ways. However, the city makes decisions on a portion of that money each year. The operating and capital budget follow a similar development process. In the fall, city departments submit operating and capital budget requests to the Budget Office and City Planning Commission. Throughout the winter, the Budget Office reviews the budget requests and projected revenues. For capital budget requests, the City Planning Commission works in coordination with the Budget Office to review budget proposals. Both agencies gather public input from community stakeholders to understand the requests and community needs. In early spring, the mayor submits recommended operating and capital budgets to the City Council. During the spring, City Council holds hearings to learn more from departments and gather community feedback on both the operating and capital budget. City Council must adopt the operating and capital budget before July 1st. During the budget process, you can help influence how the city decides to spend its resources. A few examples of how you can take part are through surveys, focus groups, town halls, and public hearings. The budget represents the City of Philadelphia's commitment to tackling its biggest challenges, including providing a safe and just city, health equity for all, and quality education for all Philadelphians. Amid all the charts and numbers of the budget is a core goal to increase equity and opportunity so that you can reach your full potential, regardless of what corner of the city you live in. To learn more about the City of Philadelphia's operating and capital budget, please visit phila.gov/finance.
Thanks, Shruti. One of the things I want to point out here, that the point that the video made is that our largest sources of revenue to pay for city services are the wage tax, the real estate tax, business income and receipts tax, and all other taxes. So local tax revenue is largely how we fund the government. And we'll talk more about that as we go. But also, I really want to make the point about how much, of our spending, just over 50%, is not up for discussion. It is legally required to be that way. It is already allocated. It's things like pensions and other legal stuff that we have to pay for. So those are, I think, some misconceptions that people have about how government spends its money. Shruti, is now when we do the next poll? Okay. Just to kind of, in the interest of interactivity and getting you into the meeting, how would you like to pay for an increase in city services? I mean, I think we would all like more green space or more, improved city services in whatever way that you like. What would you think? How would we do this? Would we cut to spending and have no tax increase? We're going to reduce services, maintain current spending and increase taxes, or cuts to spending and increase taxes. So we'd build up our reserves a little bit. It doesn't look like anybody likes that idea. Here we go. All right, I'll give it another 5 seconds. Okay, it looks like we're kind of, it's not, well, it's a pretty small sample size, but it seems like people are a little divided between cuts to spending and no tax increase and maintaining our current spending and increased taxes. So, okay, good to know. Okay. So what revenue does the city collect? These are kind of our budget buckets. We collect $5.7 billion generally, give or take, in every year. This is what we collected in fiscal year 20. You'll notice that there's some different buckets here. There's general fund taxes. The general fund is the bucket of money that we use to fund everything in city government. There's also a bucket for the school district. So the Department of Revenue collects a number of taxes that funds the schools. The schools also receive funding through other sources, but the local funding is about $1.1 billion every year. We also, the Department of Revenue, collects all your water charges and fees. That's kind of a pay for what you use benefit. So we collect $624 million in water charges every year. And then also some other local non-tax revenue, like fees and fines and stuff like that. That's $363 million. So if we start with the general fund, I want to just point out a couple of things. Business income and receipts tax, that's the biggest business tax we have, and wage earnings and net profits make up 61% of the funding for our general fund. Or 60% of our general, the taxes that we collect for the general fund. Notice that wage earnings and net profits portion of the pie is $1.6 billion. This is really, really, this is a big deal, because if you remember, wage tax is collected both on residents and non-residents. We estimate that up to 40% of wage tax is paid by non-residents. And with changes to the way people are working, they're working from home. If they're a non-resident and they're not working in Philadelphia, they are not going to pay that tax anymore. And we estimate that 15% of the 40% is never going to come back. So that's a huge issue for us when it comes to collecting revenue to fund the city. Oh, wait, go back real quick. I want to talk about real estate. So you'll notice that we have some other taxes here. You'll notice the real estate tax, it says $699 million, about $700 million. That's just, I just want to point, and we'll go over all this in multiple different ways. Real estate tax is split. Like it's about 1.4% based on the assessment of your home, and that's split. So for every dollar that we collect in real estate tax, 55 cents goes to the school district and 45 cents comes to the city. So that 699 million represents the portion of real estate tax that comes to the general fund. So just to clarify, we don't collect a total of 699 million. We actually collect well over $1 billion when it comes to real estate tax. So just want to clarify that on this slide. Okay, we also have some major taxes that fund the school district. So I mentioned we collected about $1.1 billion for them in fiscal year 20. The vast majority of that is real estate tax. That was $851 million. The next largest tax is use and occupancy. And again, we're going to go over what that is exactly. But that was $179 million. That's another property-based tax. We also have the liquor tax. So if you buy a drink in a bar or wherever a portion of the tax paid is going to the school district. It's one of my favorite taxes. And also the school income tax. The school income tax is very similar to wage tax, but it's not on your wages, it's on your unearned income. So if you have rental income or income from certain dividends or certain investments, you pay just, it's almost like it's wage tax, and you pay on that income. So that's $51 million a year. And then lots of little itty bitty things for another $5 million. Okay, I know I went over all of those taxes very quickly, and we will get into them in much more depth in a moment. But just so I understand who's in the room and what your questions might be, are there tax types that you most want to learn about, or that you're most curious about, or are most confusing? We're going to throw that up in a poll. Everybody wants to know. Oh, so far, everybody wants to know about BERT. Okay. I've always imagined trying to do a video about BIRT, but because it's business income and receipts tax, BIRT, I've always wanted to do a video where BIRT is actually a really cranky old man, like named Bert. No, just throw that out there. Okay, it looks like the most confusing is BIRT. That's really good to know because BIRT is actually a very confusing tax. So we're going to get into it. We'll get into what all that means. Okay, so these are some of the major taxes. I need to close this window. Okay. So let's start with wage earnings and net profits. You all probably know what it is. It's got a resident rate and a non-resident rate. It funds the general fund. You'll see that it's 3.8398% for residents and 3.4481% for non-residents. Sorry, I'm moving my notes here. Okay, and just so you know, there are some funny rules about how we can set some of these rates. So for example, we can't set the non-resident rate can't be more than 75% of what the resident rate is. And we'll talk a little bit more, but those rates have really come down from their heights from 30 years ago. We've been working hard to reduce those rates. The business income and receipts tax, this is a complicated tax. It's on two parts. It's on both the portion of, it's on all of the sales that you do in Philadelphia, all of the taxable sales. And the rate is 1.415 mils. That means that you pay, that basically means that you pay $1.41 for every $1,000. I think, right? Pretty sure I got that right. On the growth, basically on all of your sales in Philadelphia, and then you pay on the net profits, and that rate is 6.2%. The rate for net profits, and again, we're going to go over a lot of this throughout the presentation, continues to decline. We've been working really hard to reduce the rate on the net income portion, which is basically all of your profits. This is a very unique. The city of Philadelphia is one of the only jurisdictions to tax both of those things in the same tax. The money that we collect for BIRT goes to the general fund, and it's about $500 million every year. It's remained pretty steady even throughout the pandemic. Okay, real estate tax. We talked a little bit about this. It's 1.3998 on the assessed value. You know, every year you get a letter from the Office of Property Assessment that says this is the value of your house, and if you disagree, you may appeal it. Okay, and that's a really important number because it's the number that the OPA tells us that we base the cost of your tax on. So, and again, it's split into two. So about 45% is going to come to the city, and 55% is going to go to the school district. And again, it's $1.4 billion every year. Use and occupancy is a really interesting tax. It is basically on only commercial properties in the city. It is so properties that are being used for business. It's a little 1.21% on the assessed value, and there is a little exemption. I think we'll get into that in a little bit. Again, all of the money for the use and occupancy tax goes to the school district, and that's $163 million every year. Okay. I think I got ahead of myself a little bit, but no big deal. It doesn't hurt to say all of this twice. Wage taxes on work that folks do in the city. It's also, so think the wage earnings and net profits tax are all basically different sides of the same coin. So if you had a business, net profits is imposed on every business that's not a corporation. If you had a corporation, you'd be an employee. You as the owner would be an employee, and you would pay wage tax. But if you don't have a corporation, like let's say you have a sole proprietorship or a limited liability company, and you're the owner, essentially all of the profits of your company are your salary. So what we do is basically tax the profits of your company at the same rate as wage tax, as if it's your salary. That's a very, very simplified way to talk that through. It is a little bit more complicated, and there's some credits involved there if you paper, but just that's it. That's it in a nutshell. We already talked about that. There's a state, the Commonwealth of Pennsylvania limits the rate of non-resident wage tax. I think some folks will say, well, let's just tax non-residents more. We can't do that. And also, we cannot set a graduated tax rate, which means that folks in different income bands would pay a different rate, which you'd be familiar with because that's how federal income tax works. You know, as you get into different income bands, portions of your income are taxed at different rates. The other thing I want to point out here for wage tax is that low income residents can get a refund. And that program was recently expanded in the last few years. Over 1,400 people have applied for a low income wage tax refund. People do not take advantage of that refund the way they should. So if you have community members or you work with community members, make sure that you understand this, and we'd be happy to share more about this. Meg has a really good question that we'll get to when we get to UNO. So just make sure that your friends and colleagues understand if they're very low income and they qualify for the Commonwealth's reduced income tax rate. It's when they file their Pennsylvania taxes, they qualify for something called SP 40. They also qualify for the wage tax refund here in Philadelphia. And we have worked with the state to get that information on the state's website. So, and we can always talk more about it later. Okay, next slide. Okay, as we said with BERT, I mentioned it's a two-part tax. We don't have to go through that again, but the really, really important thing to understand is that you are only taxed on the sales you make in Philadelphia. And the other thing to understand is that the first $100,000 in revenue is tax-free. We have a $100,000 exemption. So that is huge because that means that 3 out of 4 businesses in Philadelphia don't have a BERT liability. Also, now we've made it easier so that if you don't have a BERT liability, because you're one of those businesses that earns less than $100,000, right? You're a sole proprietor that does, consulting, and you make websites, and your income or your business income is less than $100,000. You don't even file anymore. We simply ask that you send us an affidavit that says my business earned less than $100,000. Sign the line. Great. It's important to know that nonprofits and port-related activities, public utilities, they don't pay BERT. Okay, I don't think I missed anything there, but okay, we've gone through real estate. One thing that's really important to understand is that if you are, the state has makes it so that we are not allowed to charge different types of real estate a different rate of real estate tax. It's very different from other places. In other states, it's very common for commercial real estate to be taxed differently than residential real estate. But in Pennsylvania, we're not allowed to do that. But one thing that the state does allow us to do is have what's called a homestead exemption. So if you're a resident who lives and owns your home, you qualify automatically. There's no income requirements. There's nothing. It's just, do you live in your home and do you own it? You can get a homestead exemption, and that will reduce the amount of real estate tax that you owe. Currently, the way this works is essentially the value of the homestead exemption is $45,000 in Philadelphia. If your house was worth $100,000, we would chuck off 45 grand, and then you would only pay on you would be assessed only on $55,000. Generally, it's important to understand, and the reason I'm giving you all these like wacky state rules is because we're going to do an exercise later that you'll see how restricted we can be. But we're not able to, generally, we're not able to, like, let's say, increase, if we want to increase real estate tax in a particular year, generally, we're not really allowed to also increase homestead in the same year. So we'll just keep that in mind. Also, if anyone that you know, or just generally, we have a lot of programs to help folks who can't pay their real estate tax. There is no reason that if you are a homeowner and can't pay your taxes, that you can't get into a program. Like you can get into a program, can protect your home. We have something called the Owner Occupied Payment Agreement. It is one of the most progressive programs in the country. Thank you, Shruti. It helps, basically it is income, anyone can qualify, but the kind of the terms of your agreement are set by your income, and very, very low in Philadelphians can qualify for a $0 a month payment agreement. It is an amazing program. It helps. I mean, we have $138 million currently under agreement. Those are homeowners who otherwise might be vulnerable to other enforcement, but there's no reason to be there. Like, just call us and we will get you into an UPA. And just generally, like, so we've got the homestead exemption. We should talk about how much those things cost. The homestead exemption gives over $140 million in relief to homeowners every year. It's generally about $629, give or take. It's on average, most people save about $629 a year. We also have a program that protects low-income senior citizens, like who basically we freeze the value of we freeze the amount of their taxes, and they will never go up so long as they qualify for the program. But again, that's for very low income folks, and the eligibility is set. The income eligibility is set by the Commonwealth of Pennsylvania. We also have something called the Long-Time Owner Occupants Program. That's to protect homeowners who are in areas that have very rapidly increasing property values. It came out after the actual value initiative. It offers over $23 million in relief every year to homeowners who qualify. It's meant for folks who have been in their home for a long time. So you have to have been in your home for 10 years, and it's income qualified. So, and your property has to have increased by 150% over a single year. Also, we would be remiss if we didn't mention the tax abatement. So there's almost 17,000 properties who are enrolled in the 10-year tax abatement. That, again, like, is a little different for commercial and residential properties, but it essentially reduces the real estate tax for those who are enrolled. Okay. Okay, I think this is used in occupancy, and we had that question in the chat, so I want to make sure I get it. Is use and occupancy charged on Airbnbs? How does the city monitor such use? That is a really interesting question. Let me think about that for a split second. Airbnbs are subject to the hotel tax, which we don't get into here. And I should say short-term rentals, because Airbnb is just one company that does short-term rentals. Short-term rentals are subject to the hotel tax, and they are, most platforms work the local taxes into their platforms. So we do receive taxes from the very, very large platforms, and even the small ones, but they're all, if you're a company that's a platform that's doing business in Philadelphia, you're going to be tax compliant. So if you're operating your short-term rental on one of those platforms, you're going to be paying the hotel tax. UNO, this is interesting. I have a feeling that all of that would fall under the exemption. So basically, UNO is assessed on properties that are used for business, trade, or other commercial use. It's typically remitted by owners and landlords, but it's built into the lease for commercial tenants. There's a $2,000 annual exemption. So I have to think that for most residential properties, their UNO would fall under the exemption if we were to look at it for Airbnb. But Meg, you ask a great question, and I can think about it harder and get you a more full answer. Okay. So and just so you know, like vacant space, vacant commercial space, not anything that's being used by a nonprofit, anything that's port related or residential doesn't pay UNO. So if let's say you have a building that's mixed use, so on the bottom floor there's a little hair braiding spot, and then there's 2 residences on the second floor and on the third floor, the property owner only remits or pays UNO on that first floor that's being used for commercial space. Okay, next. Okay, so we've been talking about tax reform. The city of Philadelphia has been talking about tax reform since 2003. There have been multiple tax reform committees already. And they've made a lot of recommendations, and a lot of those recommendations are things that we've been able to enact, and we're pretty proud of those things. So I would just want to point that out, that like anybody who says, oh, you guys never get anything done, not true. We've done a lot. The big thing that we want to talk about is the wage tax rate has decreased by almost 15% since 2003. The highest wage tax rates were 4.96% for residents. Again, like today, they're 3.8398. So it's a huge reduction, and they are we do work continually to lower them. You'll see that sometimes we've had to pause that, like during the 2008 recession, we had to pause wage tax reductions or slow them a little bit, but they're still there. Like, I think that's still on everybody's mind that we want to lower that. Again, you'll see, non-resident rate decreased by almost 12% from 2003 till now. We picked 2003 because that was the year of the first tax commission. BERT rates, those have gone down a lot. Gross receipts used to be the rate on all of the sales that you did in Philadelphia, all the taxable sales was 2.3 mils. We've almost more than half, down to 1.145 mils since 2003. And the net income rate has decreased from 6.5% to 6.2. That will continue to go down. That is already legislated to go down. But again, for example, during the pandemic, we paused those reductions. It will go down to 5.5. Helen, you helped me out with this last time. And of course, I didn't add it to the notes. It's going to go down to 5.5 in fiscal year 2026. I think. Suffice to say, the lesson is that it's scheduled to go down, and the goal is to get it down to 5.5 for now, unless you guys have a great idea, or the tax reform committee has a different great idea. Okay, one of the other things we did was restructure our real estate tax. Prior to 2014, assessments were very uneven. We did a mass reassessment of the entire city, reset the rate, and folks, the vast majority of folks didn't really see a change. There was, I think the Inquirer reported, like 20% of folks saw an increase and 20% of folks saw a decrease, give or take. So that was a huge undertaking that happened in 2014. And the next slide. We've also made it a lot easier to file and pay your taxes. So for example, I already mentioned that we made it so that if you don't have a tax liability, you don't file. You don't have to file a big form. Like, you just file a 1-page affidavit that says, this is what my business income was, and here it is. It's all less than $100,000. Sign it and you're done. And also, like we said, businesses, it was a conscientious decision to create that $100,000 exemption. We phased that in. And once that was phased in 2016, it's a huge tax relief for businesses in Philadelphia. Also, through the pandemic, we made it so that wage tax refunds could be claimed online. That will continue to be the case. We are about to launch a new tax system of record, and that will greatly improve online services. So every tax in the city of Philadelphia will be able to be filed and paid online. And your accounts will be much easier, more easily managed. It's just, I could go on about that for a whole hour all on itself. But I'll save you that. Shruti, do you mind putting a link to the guide in the chat about the new tax center so folks can look at it later if they want to?
Sounds good.
We also rewrote all of our real estate tax relief program applications in plain language, and we've had them translated. So for example, the UPA application is available in 8 languages. Everything else is available at least in Spanish or simplified Mandarin. We've also, as you can see, we've kind of tried to build in within our abilities, within the levers that the state allows us to pull. We've tried to build in some exemptions or some relief for small businesses and low income taxpayers. So we mentioned the $100,000 exemption for BERT, the low income wage tax refund. Also, this is a really interesting thing. The city requires that if you have a business, that you pay your BERT and then you pay your BERT taxes, and then we require that you pay an estimate for your following year's taxes. That's not unusual. The state and the state of Pennsylvania and the federal government both require the same thing. The difference is that they are able to require quarterly payments, and the city of Philadelphia requires an annual payment. And that becomes a little bit of a burden for new businesses in their first year that they're about to pay their first tax bill, because not only do they have to pay their tax bill, but then they also have to pay the following year's tax bill. So it's almost like a double whammy in the same year. We would love to be able to move where everybody gets to pay quarterly, but it's just for a lot of budget finance reasons is not possible. But what we've been able to do is say for those new businesses, and that first year that you have to file and pay, instead of having a double tax bill, you can do quarterly estimated payments for that next year. And you have the option. You can pay the whole thing if you want. You don't want to worry about it. Or you can pay quarterly estimated payments in that first year if you're a new business. So that's been, I know it sounds complicated, but it is, I think, a good thing for new businesses who might not have their footing just yet. Also, I just want to point out that all those real estate tax relief programs that I talked about, that provides over $170 million in tax relief to homeowners in Philadelphia. So it's no small potatoes. You can check out a lot more of this information in detail, and a lot more detail about this information in our annual report. If you go to phila.gov/revenue, there's a whole little section about reports. But just so you can see the scale of the other taxes. So Realty Transfer Tax, if you sell a property in Philadelphia, there's a tax there. Part goes to the state and part comes to us. That's over $300 million. That's almost $320 million every year. That was in fiscal year 20. Sales tax, that extra 2% that you pay in Philadelphia, that was over $200 million in fiscal year 20. Also parking and valet parking, that was $77 million. The beverage tax was $72 million in fiscal year 20. That again is funding Rebuild, which is a capital program for parks, libraries, and rec centers, also community schools, and free pre-K. And we have the amusement tax that was $18.4 million in fiscal year 20, and then lots of little itty bitty things at $4.2 million. We didn't cover this liquor tax with the school district, but it's $60 million, and we did talk a little bit about school income tax, which is $51 million for the school district. All right, what does $100 million mean for the city? So, I mean, we're talking about a lot of big numbers, but we just want to kind of give you a sense of what is $100 million, which is sort of unfathomable. It means about 693 firefighters with their salaries and benefits for 1 year, or it means 87 miles of street paving, and 5,000 over 5,200 accessible ramps, almost 5,300 ramps, or it's both the fund for Parks and Recreation and the free library together. Those are about $100 million. That's the money that we pay. Both of those entities receive like federal dollars or state dollars for some things, but generally we're funding them, and that would be both of those things. If we just decided that we're going to do tax cuts for $100 million, that's what it could potentially mean. It could potentially mean we don't have any libraries and we don't have any parks. Okay. Okay, we're going to get into principles of a good tax system. This is really, really difficult to do in the time frame that we have. One thing that I'm going to try and make this work. I don't know if I can. Okay, so Taxing Ourselves is one of my favorite books. Shruti will put a link in the chat. It's by Joel Slumrod and John Bakiha. It is the Citizen's Guide to the Debate over Taxes. And if you want to really, really understand taxes generally, especially about fairness, this is that's a great book. It's generally plain language. It does get into some pretty heavy economic concepts, but you'll read it and have a much better understanding. It's really hard to know what's a good tax system because there's just a lot to consider, and it's going to be very subjective. Like there are a lot of competing interest groups. So like what businesses want or need is going to be different from what renters need or want, and what homeowners need and want. Like I said, we offer a lot of programs for homeowners. Well, that doesn't help renters. And if Philadelphia happens to be a city with a significant portion of home ownership in a good way, but that means that renters don't get any of those benefits. Is that fair? I don't really know. That's up to us to decide. We're also very limited by the Commonwealth of Pennsylvania and the federal government for what we can do. So lots of, I think, taxpayers, lots of folks were like, well, why don't they just da da da? And we probably can't. So for example, we're not allowed to do a progressive wage tax, and we kind of talked about that. State law doesn't allow us to do it. There's something called the Uniformity Clause, which means that all taxes have to be the same against a similar class of subjects. So for example, we can't charge real estate different rates based on how that real estate's being used. We can't charge different rates for commercial space. We can't charge different rates for stadiums. We can't charge different rates for any of that stuff. So it's got to be the same. That's the rules of the Commonwealth. There's a lot of rules about business taxes that limits how we can tax, let's say, out of area businesses that are doing certain types of business in Philadelphia. It gets really complicated, but that's kind of just the reality of the limits of what we're working with.
I just wanted to point out quickly, Rep, that we do have videos that go into state limitations and federal limitations to our taxing power on YouTube.
Oh, and that's a good reminder, because we also did a walkthrough of all the taxes that I just went through, much more in depth in a video, but we get really, really nerdy. We do regular programs through the free library called Revenue 101. We do that every spring and every fall. And we also do that through the community college business program, where we do some really, really, like, we get into it where we'll do like case studies and help you understand, especially if you're a business, how BERT works and how it interacts with the other taxes. So I'd highly recommend that you keep an eye out for our Revenue 101 programs through the free library or the community college. We did 3 videos for this, right? We did an overview. We did, there's a great video about BERT for all those folks who want a deep dive on BERT. That's a great video. We have some great handouts too that I think are part of this program.
We'll link the playlist in the chat. So if anyone is interested, they can check it out.
Okay. Thanks for that, Shruti. So that being said, generally economists agree that taxing things that can't move, like property, over those that can, like employees or businesses, is considered good policy. It's good and bad, but generally that makes for a more stable revenue stream. it is good and bad. But for example, in the Great Recession, in 2008, 2010, like that was a period of time where revenue took most real estate values decreased a ton. And in areas that relied very heavily on real estate tax values, that really, really affected them. And Philadelphia had less of an effect. However, today in the pandemic, where folks, our reliance on wage tax, which are folks moving or working in the city, is very, very affected by the pandemic. So it's a little bit of situational what will be the best, but generally it makes more sense to tax stuff that's not going to move versus stuff that can, because they don't want to, or whatever their reasoning is. Okay, so like I said, this is very, very high level. We're not going to get into certain things, like the benefit principle, like you are paying for what benefit you derive from the service. Water charges are a really good example of that. You kind of pay for what you get. But I don't, you really wouldn't be able to, like, how would we do that for like parks? Like I get this much benefit from Pennypack Park, but so-and-so gets this much benefit. Like that doesn't really work. I mean, it's kind of a nice concept to talk about, but ultimately, like when we're talking about an overarching like design to a tax system, it's something to take into consideration, but it's not the only thing that we can consider. I mean, similarly, there's stuff like the ability to pay, how are we going to tax folks in a reasonable way? But we internally, and other, folks use a few principles to sort of evaluate a tax system. And we're going to go through those this morning, very high level again. But I think it gives you a sense of like the things that we're trying to consider and that you should consider when you're thinking about your taxes. The first one is simplicity. Is it easily understood? It's filed and paid? The thing to keep in mind about simplicity is that it is often, we just kind of decide that we don't care about it as much because when we're trying to like design something for a particular policy goal. So for example, there might be parts of the tax code that are designed to increase equity or encourage some sort of activity. Like let's say we want to encourage small businesses to sell fruits and vegetables in neighborhoods that are food deserts. Well, it would be kind of, to design that credit, it would be very complicated and the business would have to do a lot to like comply with that's complicated, but we're going to sacrifice simplicity to try to get that policy goal that we want. Things like your home mortgage interest deduction, or let's say the deduction for higher education for your federal income taxes. Like those are not that simple to understand. It would be easier if the federal government just said, oh, well, if you own your home, you get this much off. But we don't do that. We've got a complicated formula based on the interest that you paid on your mortgage. And it's also debatable about whether or not that works. That's a whole other sidebar. But, if we're trying to encourage home ownership and we're going to give a federal tax credit, that we're going to make that more complicated for you. Okay. One other point I want to make about simplicity, it's so funny, is if we have so much more technology to manage our taxes and to pay our taxes, is it as important to have things be as simple if we can more easily manage an interface with somebody and then just do all of the wacky, complicated calculations on the backside? Does that matter? Do we have to make things as simple? Maybe not. But again, it's all up to what we decide is simple. Adequacy. Are we able to raise enough revenue to fund city services? It sounds simple, but it's really important because I think people will say, well, let's just reduce this rate. And sure, except that means that we suddenly have a $900 million hole in what would be our normal spending. So that it's important to keep in mind. Predictability. This is huge. One, does it deliver consistent revenue? And two, is it easy for taxpayers to predict and understand what their liability is going to be. I mean, I think that's particularly important for business. It's important for homeowners who are, it's important for residents who are planning their own personal budgets. Nobody wants surprises. And so I think that's pretty important. Competitiveness does the tax burden overall, does it make our area or our jurisdiction attractive for businesses, residents, and workers? If there are some places in the United States who are like, you know what, we don't want to pay high taxes and we don't want parks or libraries, right? Like, it's okay. That's just a decision that those folks have made about how they want to interact with their government or the role that they want their government to take. And that's just a personal choice about how you're going to manage that relationship. But, some folks do want beautiful parks, good libraries, good schools. And then there are other folks who are like, no, we don't need like landscaping in the median of the highway. Like, I don't care about that, so competitiveness, it's a little bit, again, it's very squashy. It's very like personal choice, but it is an important thing to consider. Oh, and the next ones, these are the biggies and they're the hard ones, right? They're crucial factors when we're talking about a tax system, our equity and progressivity. Both of these principles are related to tax fairness, and fairness is a little bit in quotes because like fairness is not a question of economics. It's not even something that I can tell you what it is. It's up to us as a culture and as a city to decide what we believe is fair. It's based on our own ethical and our own value judgments. And you need to keep in mind that if you want to keep a fair tax system, it's going to come at the expense of simplicity. It would be most easy for everybody to pay the exact same amount or the exact same, like it would just be easy if you said everybody pays $500. That's just it. Everybody's going to pay that. That is the most simple, but is that the most fair? And I think that a lot of folks would say that it's not. One of the things that we try to think about is where does the burden of this tax fall? Who actually pays it? Does it fall more disproportionately on vulnerable taxpayers? And also, but along those lines, we're trying to look at taxes as a whole. Like, it's not just the rate, right? Are there exemptions? What is the real bill? Like, right? Are there exemptions? Is there tax relief? Is there other things that can kind of help that make up a larger picture of what somebody might actually be paying or have to pay or be eligible to not pay? That those are important for us to consider as well. Like, you might say like, whoa, the business income and receipts tax in Philadelphia is really high. That might be true. I don't really know compared to what really high actually means. But if 3/4 of businesses don't actually have a tax liability because they fall below an exemption, is the burden actually really high? I don't know. Again, these are all squashy, ethical, judgmenty kind of questions. Progressivity is something that's pretty important to talk about. We don't have a slide on it on horizontal equity or vertical equity, but the idea, horizontal equity is sort of this idea that folks who have the same amount of well-being, of the same sort of income, that they should be taxed at the same rate of others within that same income bracket. I mean, that's a good question. Like, is it always appropriate for folks of the same level of income to be taxed the same? And I can tell you that there's lots of policies out there, both at the federal level and at the local level, where we definitely tax folks of the same well-being differently. An example at the federal level is getting a child tax credit. So if I don't have children, but I have an income, me and my husband have an income of $100,000, and then there's somebody else who has children. They have 2 kids, and they get a little tax credit for their kids, or they get an exemption for their kids on their federal taxes. They also earn $100,000. They're paying less than myself and my husband. Is that fair? I don't know. I guess it really depends on your view. within the city of Philadelphia, there are a lot of ways that folks who make the same amount of income pay different rates. Loop is a program that's going to do that. Loop is going to do that. The abatement's going to do that. Frankly, the Homestead Exemption is going to do that, because if you're a renter and you make a particular income and your neighbor is a homeowner and they make the same income, you're going to pay differently. Even though you as the renter don't directly pay the real estate tax, it's getting totally passed through to you. So, there's a lot of ways that this is not, that we have to think through what is fair. Vertical equity is the idea that like folks at different levels, or folks who earn more, would pay, or with more economic resources, should be taxed at higher rates than those earning less. So a system of taxation that is said to be progressive if folks who earn more pay at a higher rate or a higher proportion of their income than those at a lower rate, at a lower income. It's regressive if, as your income decreases, you pay more. Flat taxes are often the flat taxes where everybody pays the exact same rate. For example, the wage tax, or for example, the Commonwealth's personal income tax, the PA income tax. Those are flat rates. Everybody pays the same. Is it fair that everyone pays exactly the same? It sounds like it's kind of fair, but does it mean that folks who, if you have $100 and you have to pay, 10%, that $10 might mean more to you because you only have $100 versus having $50,000, having to pay 10%. So it really is an amount of personal choice. And if we decided, people who have a higher income should pay more, well, at what level? What's the appropriate burden of a family that makes $50,000 versus a family that makes $200,000 versus a family that makes $500,000? Like those, or those are the choices that you end up having to make. And I can't decide, like me as the mid-level bureaucrat doesn't get to decide. It's culturally like, what do we think is fair? Okay, so as we mentioned, we try to think through, like, does the burden of this tax fall on disadvantaged or vulnerable communities? And we've mentioned that like with the $100,000 exemption, over 95,000 businesses don't need to file or pay BERT. The folks who actually pay BERT are businesses who pay a large portion of that revenue, are businesses that make over $5 million. Those businesses make up or represent like less than 2% of all filers, but they pay 68% of all the BERT that's due. So that's just one sort of example of like, once you dig into the numbers, on the surface, it's like, whoa, there's a tax on both halves and it's this much. And, it's 6.2% on all your net income. That might sound like a lot. It might sound like a lot, except when you dig into the numbers, what you see is that a lot of folks don't have to pay it. And when you do the math, like let's say even if you're a business that is a $250,000 business and you start doing the math and you really see what those numbers are, it kind of tells a more full story. You kind of get a better, more nuanced story. Okay. We want to ask you, I know I've talked for a long time. I'm sorry that's kind of the way this goes because it's so much information. We do want to know what tax principles are most important to you. Is it simplicity, adequacy, predictability, competitiveness, equity, and progressivity? Oh man, I think. Oh, I think somebody must have changed their mind. Okay, this is interesting. The last group that we did, nobody cared about simplicity. I thought that was interesting. Equity and I think progressivity, if we remember, I don't remember where they were also very high. Competitiveness.
I think in the last group, no one voted for competitiveness, which was interesting.
Yeah, but I think clearly it's here. People care about equity and progressivity. And to do that, the trade-off is simplicity and possibly, revenue streams and adequacy and things like that. Okay. All right, this is the fun part. We will try to stop talking as much. This is the fun part. Can you design a better system? And this is a pretty small group, so I don't think we need to do this in a breakout group, but we're going to do it kind of together. Shruti is going to share her screen. Shruti, I don't know if we have to go through all of I don't know if we have to go through all of these slides, but we'll try to get through some of this quickly. But basically, we've developed a souped up Excel spreadsheet to help us fiddle around with taxes. So we have a hypothetical amount of money that we need to raise that's based on previous spending. And then we have the kind of previous revenue streams of the 8 major taxes, of the 8 major taxes in Philadelphia. Shruti, do you want to go ahead?
Sure. So I can talk very quickly through these slides, Reb, or perhaps we just share the tool and just talk people through that.
Yeah, I think so.
Okay.
But the thing is like, okay, there's 2 parts. 1, we get to fiddle with those rates. And then 2, you get to see how those rates affect 6 different households in Philadelphia. And Shruti will tell you, there's no such thing as the model household. These are just kind of scenarios of households that we picked.
Oh, Meg has to leave. Well, all right. So as Rebecca mentioned, now that we've I have to speak slowly, I know. Now that we've sort of gone over Philadelphia's taxes, the principles of a good tax system, this tool that we developed helps you play around with our tax rates and see what happens if we increase or decrease certain tax types. I know that this looks like a lot of information on the screen, but I'm going to walk you through it and sort of help you figure out how you interpret anything that you put into this. And I swear it becomes much easier. This is sort of as simple as it gets, I think, in a certain sense. It's a simplistic tool, and it's meant to give you a quick estimate of sort of how much a tax rate change would cost the city. And it is really meant to be a starting point for deeper analysis. So you can get an estimate of, all right, if I reduce a tax rate by half, I'd need to make $300 million. But this is not, it's supposed to be sort of the starting point. So then you're like, all right, okay, is it really 300 million? Is there anything else I'm not considering? And that sort of becomes your real sort of economic analysis. There's 3 components to the tax calculator, and that's represented by the 3 different sheets in this Excel document. The first is the calculator tool. And this is sort of where in the pink cells, a user can sort of change current tax rates and see how that affects overall collections. So just as an example, for now, suppose I make the gross receipts tax rate 0. What you will see in the sheet is that it reduces the total amount that we collect for the general fund by about $120.7 million. So the only cells that you can change in this sheet is anything marked orange. For now, I'm just going to sort of go back and make it what it is. The second sheet, which you'll see over here, is a household tax burden. Rebecca mentioned that there's no such thing as a model taxpayer. And what we have here are 6 types of Philadelphia taxpayers. And this sheet, as you change tax rates for for income taxes, so wage, earnings, net profits, school income tax, and the real estate tax, this sheet will tell you how that affects those taxpayers. Over here, we've taken into account the Homestead Exemption, which is, as Rebecca mentioned, the city's largest home ownership assistance program. But the sheet does not take into account enrollment in some of our other real estate tax assistance programs. So that's sort of just something to keep in the back of your mind. A single retired resident making $18,000, for example, may very well be enrolled in the low-income senior citizen tax freeze or some other sort of program that would give them real estate tax relief apart from the homestead.
And Shruti's saying that because what you might see is that we play with this as a group, is inevitably we're going to raise real estate tax rates, and you'll see that burden for that senior is really going to go up, but they may qualify for relief. if at $18,000, they would definitely qualify for relief,
Mhm.
but it's not built into this calculator.
And then the third and final sheet outlines business tax burdens by industry type. And over here, what you will be able to see is that if you change birth rates, how would that affect businesses that belong to different industry groups? If I modify the net income rate, what does that do to businesses in the professional services class? If I modify the gross receipts rates, what would happen to businesses in the construction space? And something cool that we've done over here is also added a cell where you can change how much revenue the business makes. So it's not just about seeing sort of what would happen to a business in construction. You can also see what would happen to a business in construction who's making $200,000 versus a business in construction who's making $10 million.
Right.
So we're sort of, go ahead.
I didn't mean to cut you off.
No, I was just going to say we're proud of it.
We are really proud of this. I know it's just a big souped up Excel spreadsheet, but it really helps kind of have a starting point. The thing about BERT to keep in mind is that, so for example, if you have a business that is very, very low margin, they don't make very much profit, but they have a lot in gross receipts. So for example, retailers like grocery stores or like car dealerships, they might have a ton in gross receipts, but they only make a little bit of profit. They are affected differently than, let's say, a professional services business that's like a law firm where they don't have any inventory. They don't have sales. It's almost all net income. It's almost all the net income portion. So when we fiddle around with the two halves of BERT, there are folks who've said, let's eliminate the gross receipts portion. Or let's eliminate the net income portion. Let's not be weird. Like, let's just tax one part. Like every other jurisdiction makes a choice. Different industries, there are kind of winners and losers. I don't want to say losers, but there are some industries that win bigger than others. So that's just one thing to keep in mind if we're talking about business taxes.
So I think, Rebecca and I feel like the easiest way to sort of understand this is just go through an example. So I'm going to get into that in a little bit. But just before we do that, I do want to make two caveats. The first is that this calculator is not meant to estimate future collections. It takes into account the last 5 years of collections and figures out sort of how our taxes would change. But this is not meant to estimate anything for the future. It also does not consider the impact of a tax rate change to collections for other tax types. In the real world, if you drastically change the wage tax, it may very well affect some of our other tax types. Or if you eliminate the use and occupancy tax, maybe that does something to other tax types. And this calculator doesn't do that, which is also sort of why we made the point about how this really is the starting point for deeper analysis. So, just keep that in mind sort of as you play around, as we go through the tool, that this is the starting point for any future work. All right. So okay. So I'm scrolling down so you can sort of see the tax types that we have in this calculator. We have the general taxes that support services by the general fund, and then taxes that support the school district, wage, business, real estate, we have divided by city and school district portion. So you can play around with both of them separately. And then for the city, we have the Realty Transfer Tax. For the school district, of course, it's the four that Rebecca mentioned: use and occupancy, Rebecca's favorite, liquor tax, real estate tax, and then the school income tax.
Can you zoom in just a little bit, Shruti?
Oh, sure. Is this better?
Yeah, we'll just have to move it around a little.
All right.
So we want to start with a really fun scenario that I think people like, which is, what if okay, just give an example though. Let's say we wanted to make wage tax we wanted the resident rate to be 2.5%.
All right. So if we want the resident rate to be 2.5%, the first thing we need to figure out is what would the non-resident rate tax be? And this is because, as Rebecca mentioned, according to state law, the non-resident rate needs to be 75% or less of the resident wage tax rate. So you sort of have to work backwards a little bit here. So the first thing, if we want the resident rate to be 2.5%, 75% of 2.5, 1.875%. Oh, sorry. This always happens on the first go. There we go. I think it's because I put that weird sign. So we make the non-resident wage tax 1.875%. That will allow us to modify the resident. Oops. Sorry. Oh, I guess 1.875 isn't actually 75%.
I mean, just do 2 point, yeah, or just whatever.
Yeah, it must be 1.7. All right. So suppose I want to make the resident rate 2.5%. My non-resident rate is 75% or less. For now, we're assuming that it's 1.5%. What does that mean for total collections for the city? You can see over here the difference between our 5-year average and the new tax rates. This will show you, as you modify tax rates across all the general fund tax type, what the total deficit or increase would be. So if our resident rate for wage tax is 2.5 and the non-resident is 1.5, the city would have a deficit of about $850 million. That's a lot of money. Rebecca went over what $100 million means to the city, and it was like 87 miles of paving, a bunch of firefighters, parks, and rec. So 850 million is like multiple times of $100 million.
That means no firefighters. We would have no firefighters in the city. But also it affects the school district, right? If we change wage tax, then that also affects school income tax.
Exactly. So go ahead, Rick.
Yeah. So basically, we've reduced the wage tax rate. The school district is now in the hole $14 million. You know, that's like all of the Chromebooks for everybody. We'll have to make that up as well. We'll have to figure out how do we get $14 million more dollars to the school district.
Exactly. So one way to do this, which is what the tax calculator allows you to do, is sort of make up the revenue through increases in other tax types. You know, we asked in the beginning of this presentation a question about, would you prefer to cut spending and increase taxes, or maintain current levels but increase taxes, things like that. So those are some other options. Like, can we cut $850 million worth of spending?
We can, but I don't think anybody would like it. It means like no snow removal.
Exactly.
Limited trash pickup, no libraries, no nothing. Like $850 million.
So
even okay, and just for that scale, even with the economic disruptions related to the pandemic, the city's budget deficit was estimated to be $450 million, right? Like, just over 400 million. So even with like global pandemic scale of crazy, that was 450. So trying to bring the wage tax down to, let's say, 2.5% and 1.5% is double that cost. So just keep that in mind of what we're trying to do here.
All right. So
Helen, are you going to correct me on my numbers?
So the budget gap in FY21 was nearly 750 million. The budget gap in FY22 before we received the American Rescue Plan funds was 450 million.
Okay, that's where I'm getting it. Okay, thank you. I was just reading some of the budget documents. It was just in my head.
All right. So let's assume that, all right, we need to be able to raise some revenue from existing streams. And let's try and balance the reductions in the wage tax rate with, say, the real estate tax rate. Since our school district deficit is only 15 million, let's try and solve this first. So currently, the school district portion of the real estate tax rate is 0.7681. Let's make it 0.8. What does that do? All right. So it sort of resolves our school district deficit. It does increase the school district portion of the real estate tax a little bit. Maybe we can tweak it to be slightly lower. We'll see. For now, we've got the school district out of the hole. What about the city, though? I mean, that's sort of the real killer here, right? So how about if we make a small increase to the real estate tax rate for the city and see what that does? Okay. So right now, the city portion of the real estate tax rate is 0.7. our combined rate has gone from 1.3998 to 1.5%. What this does is sort of raise an additional almost 70 million for the city. We're still down $781 million. This is not going to cut it. So let's try and figure out what rate would we have to set the real estate tax rate to make up for this budget deficit. Let's try 1%. Okay, that raises significantly more revenue. Now we're at $371 million in additional collections. A combined rate, though, I mean, that's a pretty significant increase. We're still not out of the hole here. Let's make the city portion of the real estate tax rate 1.4. All right, so we've lessened our hole significantly. We're still down by $75 million. Our combined rate, though, is 2.2%, which is pretty high. We did see that, all right, increasing the rate to 0.8 for the school district does mean some additional collections. How about I just make a very, very small increase for the school district, say to 0.77. And so, all right, we're a little bit short over there. It probably needs to be at least 0.78. We're down 2.9 million. Maybe we can make that up somewhere else. But we barely reduced that real estate tax rate, right? Like at peak, when we were losing 75 million for the city, and gaining 17 million for the school district, our rate was 2.2%. Adjusting the school district portion of the tax means our combined rate went from 2.2% to 2.18%. It's still a significant increase for homeowners. What does this mean for households in the city? And that's what you can sort of see in the sheet. So these are the 6 scenarios of homeowners that we have not homeowners, 6 sort of taxpayer types that we've outlined over here. Some of these folks are homeowners, some of these folks are renters. We also have a tax type that's a non-resident family who sort of live outside the city and come into work. All right, what can we see over here? Well, the non-resident couple making $120,000 sees the largest decrease in their tax. And this is because, one, remember, non-resident wage tax needs to be at least 75%. So they're seeing a pretty significant reduction in their wage tax burden. 2, since this couple doesn't live in Philadelphia, they're not seeing any tax rate increase because they're not paying real estate tax in the city, right? So their burden isn't sort of getting balanced overall. Who is seeing an increase in the total tax that they owe? Almost everyone else, to varying degrees. Rebecca mentioned that single retired resident would probably be enrolled in another form of taxpayer assistance program, but they're sort of seeing a pretty high increase in the total amount of tax that they owe. A single resident renter also sees a pretty significant increase, and even sort of more higher income families who live in the city and own their homes also see increases in the total tax that they owe in this scenario. And remember, we still haven't even gotten to a point where we've balanced the budget. So this is sort of a very quick example of how you can play around with the tax calculator.
I mean, it's an example, or it's an illustration of how many factors go into thinking about some of these rates and how they're going to affect people. And so I wish it was as easy as just saying we can eliminate 1/2 of the BERT. Okay, sure, let's try that. But then we have to balance a lot of other things, and who will actually pay for that, right? We want to reduce wage tax. Mm-hmm. What will, where do we make that up?
Should we try an example where we eliminate BERT rev since, not BERT, the gross receipts portion of BERT, since you mentioned it?
No, I want to ask the group what they want to play with.
All right. So we do have 2 questions, 2 more polling questions. The first one that Helen's going to pull up now. Oh, okay. You can see both. So these questions sort of ask you which one tax type would you like to see decreased and which one tax type would you like to see increased. vote for the one, and then we'll just run you through an exercise where we sort of come up with what you want the tax rate to be and sort of see what happens.
What do you think is most important to you? Do you think it's most important to reduce real estate tax? And how would we make that up? Would we reduce real estate tax and raise business taxes? Or would we reduce wage tax and raise business tax? Or some other, it all gets a little wonky. So we're super curious to see what you are interested in, because it's going to be a balance.
Yeah, we're just going to wait for a few more answers to come in. Oh, interesting. Someone mentioned the Realty Transfer Tax. Not something we see very often.
Right. And the one thing that this calculator doesn't do is it's not going to say like, oh, if we reduce wage tax and people have more money in their pockets, they're going to spend more on housing and that'll increase like real estate collections, or they're going to spend more on stuff and we'll see more sales tax. This is not sophisticated enough to figure that out.
All right.
Alan, I have a really great comment from Councilmember Dom, who says, we need to expand the base. Which tax helps us expand the base and create more jobs? I love that comment. I think and I think economists might have a disagreement about like, if we reduce business tax, does that translate to more jobs? If we reduce, let's say, UNO, does that translate to more jobs? Do we, if we reduce the cost of doing business, or if we reduce wage tax, does that create more jobs? If people have more money in their pocket and they're spending it on like services, are we employing more people in the city? So it's a good question. How do we make more jobs in the city? If that's our goal, all right, what did we come up with, Shruti?
All right, so of the people who answered, the majority want to decrease the wage earnings, net profits, and school income tax, and the majority of folks want to increase the real estate tax.
Wow. Oh man, do we have another poll about how far we should take the wage tax down? Can you just throw it in the chat? You don't even have to do a poll. Do people want to just throw in the chat? Like, how far should we take? Should we try to eliminate wage tax? I don't know if that's even possible. Throw it in the chat. Tell us what you think we should get to. Shruti, let's eliminate wage tax. We're going big.
Oh my God, I feel like this is going to break the calculator.
It won't. It won't. It's all math. And this calculator is not, it's very cool, but it's really just addition and
so
do we have to have it as something? It might be.
Yeah, unfortunately.
Okay.
Let's try, one should work, 0.75, right? So, yeah. So this is the lowest we can get it because I need to change the math. So if they're both zero, the calculator doesn't think of it as an error. Right now, it's saying that the resident rate needs to be 75%. All right. So this is the lowest we can get it.
So what has to happen on the real estate side?
A lot
has to happen on the real estate side to make this work. Wait, and how bad is the deficit with the school district if we want to eliminate wage tax?
Oh, that's a good point.
It's 33 million.
About 40 million. Yeah, $34 million.
What if we did this instead of increasing the school district portion of the real estate tax, because we know that's going to go way up? What if we increased use and occupancy a little bit to fix that?
All right, shall we try making it 1.5%, a small change to see what that does?
What if we increased use and occupancy a lot and then could eliminate the school district portion of the real estate tax?
Ooh, all right. So let's make it 2% for now. I'm going to eliminate this entirely. All right, we're down 706.
Ooh.
Let's make the use and occupancy tax 5%. So remember, the current rate is 1.21%. If I make it 5, we're still down about $300 million. So let me double that rate. Okay, we knew that was going to happen. Half it. All right.
Holy smokes.
So if we change the use and occupancy tax rate from its current 1.21% to 7.5% and eliminate the school district portion of the real estate tax and reduce the school income tax rate to 0.75%, we will be able to balance the school district budget.
But the reason I think we're doing that is so that we don't have to raise real estate
on the school side.
On the school side, right?
Mm-hmm.
So does that help us out, not have to raise the overall real estate tax rate?
All right. So since we've eliminated the school district tax rate, I'm going to get the city to the current tax rate, 1.3998%. That would still put us in a deficit of about $936 million. And this is just maintaining the current real estate tax rate. We're just assuming all the money goes to the city. So we're still in a little bit of a hole.
That's a huge hole. That's a huge hole.
So we'd have to think about increases to some other tax types, or maybe.
Oh yeah, well, Sabrina, we'll definitely get to what does this scenario do to the business and households and other tabs. We'll definitely get there. Why don't you make that rate 2%, Shruti? Just make it 2. Where do we get to? Man, okay. If we want to go all in on no wage tax, this is a big difference in our real estate.
How about I make it 2.2, which is what we had that other time? Still sort of in the hole. We could try maybe balancing it with an increase to a business tax, but remember that may cause other effects to businesses in the area, like say a small increase to the net income rate. I mean, that barely covers it, right? A small increase to the net income rate would only sort of raise about $2.6 million. We're working with much larger numbers here. We need to increase our revenue by $126 million. All right. So suppose this is our thing, and we're just sort of like, we'll figure out that $126 million in some other way. Let's pivot to what Sabrina suggested and see what's happening to households and businesses in this scenario. Okay. So here's all of the scenarios that you've already seen before. I mean, a non-resident couple is obviously seeing a complete 100% reduction in the tax that they owe to the city, because remember, they're only paying the non-resident tax rate. The non-resident tax rate is 0%. They are not seeing any increases to the real estate tax rate. Who else sees a reduction in the tax that they owe? A resident couple making $75,000 is still seeing a tax reduction over here. And this is sort of just because they're renting an apartment, whereas we're making assumptions about where they rent and with whom. But the wage tax reduction for a family of this size is significant enough that they don't see an increase in the total tax that they owe the city. Who is seeing an increase in the tax that they owe? Well, it's that single retired resident again who's seeing a large increase in how much tax they owe the city. And they're a single resident making $10,000 who rents an apartment, and a resident family making $150,000 who own their home also see an increase, but that's sort of a much smaller increase. 4.35% for the single resident and about 4% for the resident family. Since we increased the net income portion of BERT, let's take a look at what's happening to businesses as well. So remember, in this scenario, to try and make up for our deficit, we increased the net income portion of BERT from 6.2%, its current rate, to 6.25%. And this models out how much would businesses pay in each of these 5 sectors if their total taxable liability was $6 million. So this is a big business. Small increases overall. Sorry, go ahead, Rebecca.
I mean, it's almost nothing, right?
It's almost nothing.
It's almost nothing that supposedly professional services would pay $331, right? Like, that's nothing. So
Exactly. And if we want to see like, okay, fine, this is for sort of a bigger business, what would happen to someone whose total taxable receipts are $300,000? I mean,
it's nothing. I mean, but think about an additional $500 to a family who only makes $25,000 a year. I mean, $500 is, that's getting ready for the school year, right? That's school clothes for the year or whatever. I mean, that's a huge burden for some families.
And remember that we've still not reached a point where we have a balanced budget. We're still operating on a deficit for the general fund of about $126 million, and assuming that maybe we can think of like new revenue streams to make that up, or cuts in spending to make that up.
We're not advocating that we raise taxes on businesses, but we just do want to kind of give a full picture of what we're talking about here. One point that I do want to remind folks is that, like, when it comes to income tax, especially at the federal level, right now the child tax credit has been modified, especially through pandemic relief. And I would be remiss in not reminding everyone to take advantage of that, especially members of your communities who might not file their taxes. They might not be able to, they're not getting the benefit. So if everyone in Philadelphia takes advantage of the federal benefits that they are entitled to, like 75,000 children would be lifted out of poverty in Philadelphia. So please, please, please make sure that you're aware of that. There's a ton of literature out there, and I'll try to do a quick search and put some stuff in the chat about the child tax credit, but it's a huge push that we want to do. It's not our tax credit. It's not the city of Philadelphia. It's a federal tax credit, and it means a lot to families in Philadelphia. So make sure your neighbors and your communities know about it. All right, is there anything, Shruti, what else do we have on our agenda today? I'm not seeing a whole lot of chatter in the chat about what folks might want to play with here.
I was just going to say that we are trying and planning to share some version of this calculator so people can sort of play around with it themselves and see what happens. So, keep your eye out for that. I know that this is a lot of information, and it does take like a couple of attempts at the calculator to really get a sense of what's going on. But we think this is a really exciting tool for anyone who is nerdy about taxes like us, as Rebecca would say.
There's definitely some tax nerds on the call. I put a link in the chat about the child tax credit, getctc.org. I know that's in other language. It's in Spanish as well. So that's just it's a little bit of an aside, but it's important to make sure that we let people know that at every opportunity.
All right.
So I don't think we had any parking lot issues to discuss.
I think I'm just going to move to the what's next slide.
Yeah, I think that makes sense. First, I want to thank everyone who's participated today. It's been, I know it's getting to be a really beautiful sunny Saturday morning. So thank you so much for spending your time with us. We will be producing a report about this meeting and the previous public meeting so that everyone has an opportunity to see what the participants of those meetings had to say. But we also really, really encourage you to share and fill out the city's tax preference survey. That is available until October 27th. It's also in multiple languages. I think I said it's in Spanish, Vietnamese, simplified Chinese, French. Is it in French?
Yep.
Yep. Okay. It's in 5 languages, right?
Yes, that's right. I'll put it in the chat.
English, Spanish, French, Vietnamese, and simplified Chinese. Great. Also, you should look for, we had a link in there about the Tax Reform Committee. The Tax Reform Committee will be releasing their own recommendations. We'll be sharing the information that the tax committee is going to get those results from that survey, and they're also going to get the report about these community meetings. You can take a look at what their recommendations are. You should see that in January. And then we hope that you are able to check out the budget process as it happens this spring, kind of late winter and spring. All of those are public meetings. And there will be a lot more about it. Shruti, did I miss anything? Anyone else? Any administrative folks, did I miss anything?
Just a reminder that if you do not have the homestead exemption, to please apply for it.
Yes.
As Rebecca mentioned, it saves you up to $629 on your property taxes. And if you own and live in your home, you're eligible.
Right. Yeah. And again, like there are so many programs to support homeowners in Philadelphia. Also, if you are part of a community group, or you are, maybe your neighborhood group or a business group, the Department of Revenue does a ton of outreach every year. We are really curtailed because of COVID, but we're back and we want to talk to the public even more because so many folks need it. But we will come to any event. We will do any virtual events. We can talk about business taxes. We can talk about real estate tax relief. You name it, we will talk about it. And for any length, we can table at your event. Just let us know. We will put it on the calendar and we will be there. Reach out to vicky.riley@phila.gov. That's vicki.riley@phila.gov. I'll put it in the chat. But we want to hear from you. We have a ton of resources online. And so check us out on YouTube. Check us out on Facebook, youtube.com/PhilaRevenue, facebook.com/PhilaRevenue. We'd love to chat. Thank you so much. I'm going to give it 8 seconds in case anybody has additional questions or any other comments that they want to say. This is a really small group, so feel free to unmute yourself. I put Vicky's contact information in the chat. All right. I thank you so much, everyone. I hope you have a good rest of your day. Thank you to our translator, Senor Pisley, Miguel, Daryl, Helen, Sabrina, Shruti, all of the other staff members who are here. I really appreciate your time this morning. You're the magic. You're the magic that makes it all work. And we really appreciate your effort and your time. Thank you, everyone.
Thank you.
Thank you.
Thanks.